Welcome back to Yahoo Finance. Social Security is set to see its biggest cost of living adjustment in 4 decades in 2022. But with inflation continuing to climb, is it enough? Here to help us discuss the topic is Matthew Rutledge, Research Fellow, Center for Retirement Research at Boston College. Matthew, thank you so much for being here with us. So a 5.9% increase is slated, which on paper is very nice. But it's not really in line with inflation numbers that we're seeing. For example, CPI came in at 6.8%. And for example, we know things like Medicaid is going to go up by 14.5% next year. So I'm wondering, how does this rate get calculated? When did it get calculated? And then do you think this is the biggest adjustment that we see, or do you think there'll be bigger adjustments to come?
Well, as you said, this is the biggest adjustment we've seen in quite some time. And I think when I talked to one of your colleagues a couple of months ago, I think we thought that this was going to be this one-time blip, the biggest COLA we'd see for a while, and then we'd see more normal ones the next year. But given the inflation reports we've seen since then, they calculated the COLA from the previous October to this October, and then November came even higher. So is a possibility we would actually see another fairly big COLA adjustment next year. It really depends, I think, on so much of what's going on and so many of the things that we've been looking at in terms of whether this inflation is going to be transitory or not. Are the ports going to still be backed up? Are we still going to be seeing labor shortages? Or are we going to finally kick the pandemic or figure out what the end game should look like? At this point, I would anticipate that the COLA would be more like the 2 or 3% that we usually see than the 6% that we're almost seeing this year. But if we're not able to get inflation back under control, I think we're going to the good news, I think, is that Social Security beneficiaries are going to be protected against most inflation that they would face.
You know, I saw a pretty alarming stat, Matthew, about seniors and how heavily they rely on those monthly Social Security checks. In some instances, it can make up to at least 50% of a household's income. What does that tell you about the state of retirement savings in this country?
Well, two things. One is that Social Security is essential to protect. Very hard to get away from the importance of Social Security. And so if we get closer to the point at which the trust fund is exhausted and an automatic 20% benefit cut kicks in, then that's going to devastate a lot of household portfolios for the people that are relying on that Social Security benefit. The other is that we should definitely be thinking about alternatives, more reliance on employer-sponsored retirement savings through 401ks or more saving for people on their own, or easier ways for people to access their home, which is often the biggest assets that any household would have available to them. All things are going to be basically, we need an all of the above approach to make sure that people have all of the resources that they might need in their retirement. And that includes, I think, extending Social Security's generosity, at least as far as it's been. Definitely not cutting back.
So many people rely on Social Security, but projections show that they may not be able to pay full benefits by 2034. So what about people who are now paying into the system and wondering if they'll see anything that comes out of it? What sort of pressure is there on government and lawmakers to make a change to make sure that it does prolong and it is there for people?
It's funny, you would think there'd be a lot of pressure. You would think that'd be the kind of thing that candidates, especially appealing to the older vote, since older people are more likely to vote in almost all elections, especially the ones that are not just presidential elections. You would think that the number one issue that people would want to talk about, the politicians would want to talk about, is Social Security. We haven't heard a peep through any of the last few election cycles. It's almost like there is bipartisan support, but it's bipartisan support for avoiding the issue entirely. I think what's likely to happen is, if we really were to sort of force some kind of reform, I think we'd see a mix of extending the full retirement age out a little further. Currently, it's in the process of rising to 67. I think we could see that go higher in exchange for taxing a higher portion of higher income earners' earnings. And maybe some sort of change to the cost of living adjustment so that we see a very gradual change in the generosity of benefits. But more likely, I think that we're not going to see any kind of change. The option that's available, and I think is getting a little bit more attention now, is just the idea of kicking the can down the road by borrowing. Social Security is historically an independently financed system that doesn't necessarily have to stick around if it avoids this massive 20% cut to a lot of people that don't really have any alternative sources of income once they get to retirement.
It is interesting to see how other countries like Australia have dealt with this issue very, very well. We will have to leave it there. Matthew Rutledge, Research Fellow, Center for Retirement Research at Boston College. Thank you so much for your time today.